First up, we've got Starbucks, which is a coffee and prepared foods retailer with stores predominantly in the US and Europe, growing fast in China. It has a market cap of $78.7 billion, a PE ratio of 27.63, and a dividend yield of 1.83%. So I want to go straight to that share price graph, and as you can see, not much actually done there since late 2015. It's sort of jumped around. Fantastic growth before then, but it's been a bit slow since about 2015.
Yeah, this is really, I guess, the sort of poster child in terms of global expansion of a coffee brand and quick service brand. They've got operations in 27,000 stores in a multitude of countries, globally
they open
renowned.
as many Starbucks a year as how many stores famous brands have.
So that's, I mean, just gives you the scale. So I guess the issue is where to from here. You mentioned China and emerging markets, but tastes are slightly different and styles are slightly different. So growth not as fast. So they've expanded in South Africa. Difficult to find the right partner potentially and get the right footprint. So we have seen that in terms of earnings growth has stalled a little bit. We're also seeing coffee evolving, like you've seen, say, for example, in the beer market, craft beers. So we're getting these artisanal coffee brewers, and which sort of have, you know, a kind of exclusiveness to them and sort of interest instead of this sort of what is becoming a mass brand. I think it is a powerful brand, but is a more mass brand appeal now, Starbucks.
Yeah, and that sort of mass brand appeal, it's very fashionable to say Starbucks coffee's terrible and very hipster-like to actually like Starbucks. You know, it's a very mainstream these days. In the latest results, I noticed so their tea brand, Teavana, they had to actually close 320 stores, and that was quite expensive. It sort of overshadowed the other announcement that they'd bought back a whole bunch of Chinese stores. So they've brought them back under the Starbucks umbrella instead of being franchises. Right. And I have a feeling that's going to be very solid for earnings going forward, because that's where the main growth is coming from.
Yeah, so it does look like the sort of the core earnings is reasonable. If you look at the same store sales, that's a key metric, because that's how the core brand is doing, as you know, before the expansion into new stores, and whether they you know, are feeling the pressure of new competition. Not really. It's been quite steady. It's just that growth has slowed, and I guess hence you're seeing the share price move sideways. But that is one way to expand, that they can buy back franchises. I guess we're going to speak about Taste later, which has been appointed in South Africa to expand the brand at some time. Once they've done their job, you know, it could go back into Starbucks.
And even with the share price doing nothing for the last 2 years, the PE is still sitting at around 28. So we've actually probably seen a bit of PE compression, you know, maybe the earnings catching up to the share price a little bit.
So I mean, with a rating like that, you know, it can be quite hard to continue to meet investors' expectations, because they have been high, there has been good growth, and yes, as you say, it's sort of in a period of consolidation. I think if we do see some growth, it could move up from here, but it is quite difficult. They've got such an established base, so each store that they open marginally adds less to the base than before.
So is this a buying opportunity?
I guess if you love Starbucks and love the brand and feel that they still have a lot of expansion opportunity, I think it is, because it has moved sideways. You know, I'm a little bit more circumspect. I think just given the rating and the current scale of the operation, I can't see massive growth from here. So I'm going to say the coffee's not that hot.
not that hot. Cold coffee. Nothing wrong with an iced coffee in the middle of summer. I'm going to disagree. I'm going to be hot on Starbucks. I do think that recent acquisition in China, which is actually the biggest acquisition they've ever made, is going to be earnings accretive and underestimated by the market. So I'm going to remain hot on Starbucks.